freedom isn't the result of wealth. It's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, and I'm here with Adam Penn. Adam, what is up today?
What just passed in my head was how many times it used to take us for you to say that without breaking up laughing or saying the wrong name or something, especially when we started this. But now it's smooth.
Or saying forgetting the name of the podcast. And yeah. No, it's become muscle memory.
Second nature.
Second nature. There we go. I like that.
Wake up and say it every morning. Positive affirmations.
Yeah, I have the intro to this podcast on my everyday morning affirmation list.
Oh,
that's why I know it so well.
No, not a whole lot. We had a good month. This was it seems like for the last year, everything in my portfolio has had, every month something has needed something, an AC unit on something, or the revenue on this business was low because we put a lot out to marketing or whatever. And there was always one look. I looked back at my cash flows for the last 12 months, and there was always one thing that was negative. There was always one thing in the red, and everything was positive this month. So that was a good feeling.
That's a great feeling.
That was last month. We'll see how this month goes.
Sure. And who knows what the months will look like whenever this episode actually airs.
Could be completely out of business by then.
Yeah, exactly. Well, hopefully not.
Hopefully not.
That's cool. It's always exciting.
Mm-hmm.
Well, I think we've checked the banter box for this week.
I think you've got an article up on the screen.
I do.
Does this record in 3 streams so that'll come up separately, or did they just have to stare at that the whole time?
I have no idea.
Okay, we'll find out.
I guess we'll find out. No, it records in 3 streams is my understanding. So
it's pretty cool.
Yeah. No, it's fancy. We use only the highest of technology here at the Wealth Independence Podcast. Exactly. No, I saw this actually in the Wall Street Journal today, sometime. I don't remember when it was. I thought it was interesting. I thought it was relevant, and thought it would make good fodder for conversation, especially as I started reading through it. I was just like, my brain was going, and I had all these thoughts. I'm like,
you said you were getting pissed off, right?
A little bit, to be quite honest. There's some of it, so we'll get into it. But we'll have the link to this article in the release notes. Everybody can actually check it out, or you can just follow along here on the screen share and see it too. But this was an article Wall Street Journal published in their markets and finance section, and the headline was, "Wall Street is pushing private assets into 401ks. We asked whether anyone wants them." And there's a handful of data here, but I thought the very first kind of opening thing here was interesting. It says, Wall Street's biggest asset managers want to give everyday retirement savers access to investments such as private credit and private equity. And then they say one problem: 401k investors aren't exactly clamoring for these new opportunities. And then they kind of point to this survey. I'm not exactly sure. I guess it's a Wall Street Journal survey to where 10% of people said they are dissatisfied with their 401k options. And they're trying to frame that as, I think, a low amount, which I guess it sounds low, but I also feel like that's still a significant amount of people. And if you look at how many trillions of dollars are in 401ks and in the traditional retirement system, 10% is still a pretty doggone large number. I think that's probably still over $1 trillion of money.
That'll move some markets if they all move to the new market.
It absolutely would. So, I think that was my first sort of thought on this, was that I didn't like the Wall Street Journal's framing right off the bat here, implying that that 10% is a small number in this context. And I just don't think it is. And they kind of went into the next thing, and it's something we talk about often here. I thought it was funny. They specifically called out cryptocurrency. They say, apart from cryptocurrency, Americans know very little about these alternative investment areas. Nearly 40% reported never having heard of private credit funds, for example, and only 15% said they were highly familiar with them. So that's exactly the problem, right? Like that's one of the we've talked about this. I can go on and on and on about this. I mean, I have a finance degree. The alternative investing space is like this footnote that you're sort of taught about that you don't ever really need to worry about. It's like, no one does this. This is only for the uber wealthy and the family offices and the billionaires. Like, don't worry about this. And that's a huge problem. And like the Wall Street Journal is kind of inadvertently highlighting it here. Like they're saying, well, people don't know about this, or people aren't clamoring for options because they don't know there are other options. Well, it's one of the biggest problems. It's one of the reasons this podcast exists, why we put out content. One of the reasons why we do what we do is to try to get more people into this space.
Yeah, that's the, no, only 10% of people are dissatisfied with their options. And you're like, well, do the other 90% know there's other options? Because there's that one category there that says I'm satisfied, but would like more mutual fund and ETF offerings.
Yeah.
I don't think anyone's ever said that.
Yeah. Well, I think people have, because it's the only thing they know, right? And so I think some of this article too is written in the context of people who, for the handful of people, and this is actually another point that's addressed later on, the handful of people who would actually go into select the investment options in their 401k. So this, we'll go ahead and address this now. This gets into a whole other thing. People talk about, oh, I've invested in a 401k. Well, that's not, you haven't invested in a 401k. The 401k isn't an investment. It's a vehicle. Like it's the car that the investments sit in. You actually have to invest in something. Like there has to be a thing that is held by the 401k. And very few people actually go in to make those selections. There's usually a default option that if you have, you're participating in the plan and you don't choose anything, it's the thing that you get put into. It's usually a target date fund based on your age or something like that, or the target date fund that's the furthest out. Sometimes it's just an index fund of the S&P. Sometimes, worst case scenario, it's like a money market fund and you're invested in cash.
The worst case scenario is it's just cash and it's not invested anywhere.
Exactly. And sometimes that's the default option, and people then get surprised when they're like, well, I've been saving in this for so many years and the market's up so much since I started. Why hasn't this grown? It's like, well, you never actually went in and told it to invest in something. I think the days of that have kind of gone away because that's more people are aware of that. And that was I remember there was a few years back, there was kind of a thing that was like, oh, everyone's like trying to, these 401k providers are trying to cheat people by not actually putting them into investments. I think that's largely gone, but the point is you still have to go in and actually make those selections. And so I think that's where we're talking, you see this like 45% here of people that said I'm satisfied but would like more mutual fund or ETF offerings. That those are the people that are actually going in and they're surprised when there's like 4 funds that they can invest in. And they're like, well, shoot, I'd like to do something more.
They want an ETF for real estate and private credit. They just don't know to ask for it.
That's part of it, and I think that's a lot of what this article is geared at. Which, to touch on that point, Adam, you talked about private credit. I get people. So we obviously have a commercial private credit fund, the Private Commercial Credit Fund. Let me get the name of our fund correct. So private credit's all the rage right now, right? And you see it here. I get people that send me articles are like, oh, hey, look, here's the New York Times, here's the Wall Street Journal, here's the Financial Times talking about private credit. You guys have a private credit fund. Yes, we do. Ours is real estate specific. And most of the time, when you hear these mainstream publications talking about private credit, they're talking about exactly what the article says right here. In the most common form, such funds, private credit funds, raise money to lend to privately held companies, holding the loans and passing on the returns to investors. So this is a little bit of an aside, but if you are ever reading one of these mainstream publications and they reference private credit, chances are they're not talking about the same type of private credit of the fund that we have. They're talking about private credit that is originated, or it's loans that are originated to companies, not loans that are originated on real estate. And so kind of an important distinction, because I think there's a little bit of potentially a bubble in this space. I don't know if it's gotten that big yet, but there's a lot of institutional demand for business private credit. And I've seen some things that some people think that this could be analogous to the subprime bubble, and you got a lot of lending to businesses that shouldn't have any money lent to them whatsoever. So I kind of say this as some
when there's derivatives of the private credit funds, is that when we know the bubble has
yeah, exactly. There's like the CDOs and all that. I think of that scene in The Big Short where they're like the guys describing like all of the different things, and it's an investment wrapped in another investment. I say that to say we'll point back at this if this space ever blows up and be like, okay, like this was getting a little bubbly, and it's the business side, right? Like it's not real estate, private credit that's getting caught up in this. That's a whole separate topic. I won't dive into that, but I do. I want to keep this episode moving here and not get bogged down in this. But anyway, I think this is interesting here that there's a massive knowledge gap, and the Wall Street Journal acknowledged that nearly 40% of respondents, right, 40% of people have never heard of private credit funds, and I would say that's probably representative of knowledge of let's say specific alternatives, as opposed to just generally, there's this alternative space, and I know there's other things out there, but nobody does that except for the uber wealthy.
Which, as you look at your notes, that is like the premise of Bob Fraser and Ben Fraser's new book from Aspen Funds, which is it was on my desk. It's sitting over there, but it's their what is it? What's the name of it?
Invest Like a Billionaire.
That's the podcast. Is it the same name as the book?
Yeah.
Oh, that's convenient.
Maybe if you had the book sitting on your
it's counter, on the counter over there.
Well, look at the title, because that's what it's.
Okay, Invest Like a Billionaire. They talk about how most people think private alts are only for the ultra wealthy, but they're actually for almost everyday individuals.
Yep. And I think this is a good example of a very recent survey that shows that that's not just managers or offerers. That's not even a word of private of alternative investment offerings. People who are offering private alternative investments. They're not just saying that, right? Like this is very, very true. There are people that are unaware, and those that are think it's limited to just the incredibly wealthy. So to that point, you've got a lot of focus right now on trying to bring more people into this space. This article reference here talking about Apollo, BlackRock, Blue Owl Capital, angling to bring private assets to the $13 trillion 401k market, right? So that, again, was the number. 10% of $13 trillion is still $1 trillion, $1.3 trillion. A lot of money. Talk about many private investment firms generated interest in their products among wealthy individual investors. You'll take a high-powered sales and education effort to persuade regular American investors. At the very bottom of this article... Oh, sorry. Go ahead, Adam.
Go back up there real quick. The part that's interesting to me on right there. So, among wealthy individual investors who work with financial advisors,
yes,
I will note that a lot of our investors are not running this investment through their financial advisor. And we have episodes where we're like, most financial advisors would probably say, don't do it because it pulls it away from their assets under management. And I would argue that a lot of people that are investing in larger things like BlackRock or these private alts, if they're talking about the elite wealthy investors that are the shadow people in this article, those guys, like the most wealthy, will have a family office, which it's an advisor, but it's essentially them owning the advisor, and most of them are just going to be wealthy people who make their own decisions.
Yes. So that is the underlying premise of all of this, which is that what Apollo and BlackRock and everyone are angling to do are create public investments comprised of private investments that are eligible to be put in a 401k. And that could show up on those when you go into your 401k and select the options that are available, that there is the BlackRock private credit fund shows up as an investment option in your 401k. So that's really the underlying premise of this whole article, is that these companies, these very large, again, BlackRock, Apollo, they're trying to position their funds to be able to get access into this 401k. It's not the same type of individual offerings that like we do. They're positioning to get billions and potentially here trillions of dollars into these funds.
What was, all of this is based off of Trump's executive order to allow.
Yep.
What was that executive order? Because I'm loosely familiar with it.
They talk about that.
It was the first line, if it's not the.
Yeah, there's a piece in here that talked about the Labor Department. Yeah,
right there.
Trump's executive order directed the Labor Department and the SEC to issue regulations making it easier for employers to include non-traditional offerings of 401k plans.
So inside the plan.
Correct. not
to basically create them as self-directed.
Correct. That's not what it's doing. It's simply allowing this to be another checkbox option inside that plan management that you can choose BlackRock's fund or Blue Owl Capital's fund as one of those options. Not that you can take your money and go into some sort of self-directed option. So I obviously disagree with that. But I like the fact that this is at least bringing more awareness to private investment offerings. However, again, it's still, and this is one of the things let me go back to my notes here. So where's Susan? Susan, if you're listening, you got quoted here and you're showing up on our podcast now. Susan Cortez, who's 24 years old, said while she's never heard of private investments, wow, she is open to learning about them someday. And this is a quote from her. I wouldn't want to venture into something like that until I get more experience with the 401k.
It's like the Maserati, right? You don't want to work on the Maserati until you get experience with the Toyota Corolla.
I guess so, right? Like I thought that was a funny quote. That she's like, well, I don't know. Maybe let me invest in all this other stuff for a little while. Maybe we'll try the private stuff at some point. Again, I think this is interesting where she's talking about getting experience with the 401k, and I don't know what experience you need. Like it's a vehicle, not like
there's no
Maserati versus Toyota, right? It's like, well, let me see which one gets me from point A to point B. It's like, well, that's not really what we're talking about here. There was another one here. Let me find this other quote. So, this says here, the argument in favor of private investments resonates with Ryan Walker, 38, a father of three from this town in New Jersey. There's only so much he quotes, as a quote from him here. There's only so much I can contribute to my retirement account, he said. I want to make sure those retirement dollars are growing as much as they can. All of this still, both these quotes underscore the idea that even though we're talking about private investments, alternative investments, people still are not thinking outside of the traditional financial system, the traditional financial options, right?
Check the box. This one has a higher return. I'll check that box.
That's exactly what this is. It is not. He's like, how can my retirement account get the highest returns? Which is a fair question to ask. May not be the best question to ask from a risk perspective, but
do you think this next chart down here is just people weren't actually answering the survey? Or do you think there's 14% of the population that doesn't know what a stock is?
I don't know. They surveyed 2,000 people here, so I mean, I feel like the sample size was fairly large.
That's 280 people plus the other 80, so 360 people total who don't have a clue what a stock is.
Yeah, I wasn't analyzing this to that level, but you're right. Like, that's a little scary. I don't think those people are ever going to be candidates for investing in private alternatives. But
this might be a total side note, but one of the reasons we talk about all this stuff and we're so focused on investing is you need to be in charge of your own career. Obviously, we like investing. And I have an investor the other day we were talking about building a balance sheet, a personal financial statement out for him. He's like, all that number stuff there, that gets you excited. I don't like any of it. I don't want to do any of that. He's like, but I do like it. But my point with that is he does like investing and he understands it's something he needs to learn and do regularly. Dustin, have you seen those videos online where people will go and interview people in Times Square and be like, who is Thomas Jefferson? What country are we in?
Yeah.
Or what country do people speak Japanese in?
Yeah.
And people will answer like, what country do people speak Japanese? And they'll be like, Europe?
China? Oh yeah. What country? Europe. Yeah.
Yeah. But those are like real answers with real people off the street. It's not spoofed. It's terrifying.
Yeah. Well, Adam, to your point, I think that's kind of what this was showing here. This next section I wanted to highlight. It says more than half of 401k investors take a hands-off approach to their retirement accounts, the survey showed. Nearly 20% of respondents with 401ks said they aren't sure how their 401k money is invested. So that kind of goes to what we were talking about. I mean, we talk often about abdication, right? You don't want to abdicate your investment responsibilities. And this is a great example of this.
You're like literally shucking the responsibility or the interest of having control over the latter 3/4 of your life, the half of your life, depending on how, you do good in the early end, it could be 3/4 of your life.
Yep.
2/3.
Yeah. And you're just saying, well, I don't know, it's over there somewhere. And this just kind of underscores that's what happens, right? And again, like, because now you have the education side, even the lack of education about private investments in general, even the people who decide they want to take a little bit more control still aren't stepping outside of that system, right? Like they are completely unaware, like the world, the investment world to them exists in this bubble.
This might make it worse because there might be a spot on the 401k that says alternatives. And then when we start talking to people about alternative investments, they're going to be like, no, I have those.
Yeah. Oh, I invest in alternatives. Cool. Like that's good, but that's not the same thing. Let me see. There was, I think that might have been all the stuff. There were some things in here that talk about fees. I think there's this perception that all private investments have massive fees. And they talked here about this guy that said he wouldn't put money into private investments unless the fees fall significantly. Said keeping fees low is a reliable way to earn higher long-term 401k returns.
Only he knew what was charged inside those 401ks.
That's so now they throw out these examples here that says he pays about 0.04% to 0.1% of the value of his investments for the index funds in his 401k. So that's fair, but you shouldn't expect to pay more than that because there's no management happening there, right? Like that's literally just computers investing in whatever companies are in the index, or investing in goodness gracious, just a single fund that represents the index as a whole. Like you shouldn't pay fees for that.
Also, let's just say that a private investment, let's say a syndication through us, has, I don't know what the average fee is, but let's say it's 3%. Let's go high. Let's say it's 4%. But if the private deal through appreciation, depreciation, cash flow, and debt destruction makes 15%, 20%,
Yep.
All those things together are probably going to be north of 20. That's got to beat his
return,
right?
Not to mention the volatility he's exposed to if all he's investing in are index funds.
Which is weighted by the ones that are like the biggest in the space, right? Like the S&P 500 is like 70% of the S&P 500 is like the top 5 stocks.
Yeah, it's a market share weighted as opposed to like an equal weight. There are index funds that are more equal weight index funds, but that's when most people refer to, I'm invested in like SPY or something like that. That's not equal weight. In some ways, it makes me sad. Like I'm happy that there's more attention that is coming to this space, right? That more people are at least becoming aware of things that are different than stocks and bonds. But I also still hate that the entire premise is we're figuring out how to get these in like types of investments that were previously outside of this bubble. The whole thing is like, let's figure out how to get them inside this bubble because that's all that people know. And if you're just willing to step out of that bubble and invest in effectively the same things, but not through your employer's 401k or through your Fidelity IRA, you can get access to some pretty amazing deals that come with a lot of other benefits too. Regardless of the IRA, if you invest just with your own account, like in a regular taxable account, right? Like people get frustrated about, well, I've maxed out my IRA contributions for this year, so I'm not really doing any more investing. It's like, well, okay, so you're going to go invest in your taxable account and you're going to buy more index funds? Like, do you know you could wipe away most of your tax burden by certain types of investments that you would make outside of this whole bubble? I'm kind of ranting here. You can see, I don't know, Adam, you got any other final closing thoughts on this? I get worked up over this, as you can tell.
I think one thing that came to mind is just that there's a reason that, let's be a conspiracy person for a second and say that the powers that be want these alternatives to be inside this bubble, right? Like they make fees on it, right? They have more control inside the 401k. You can go super far conspiracy and say that, they have the ability to seize those assets, which, some people believe. But I think that, and once again, I think the alternative investing space as we know it is really more the traditional investing space that people have always had: land, oil, commodities. Those things have been around for thousands of years.
Real assets.
Yeah, real assets. But let's just stick with the word alternative. And if you're looking for an alternative, don't find the alternative in the same spot you found the quote unquote traditional, right?
Yeah.
Like it's no longer alternative.
Yeah. That is a great point. Totally agree. Well, we'll like I said, we'll link this article if anybody wants to go check it out. There's some interesting data and some charts in here. I thought this was a neat little survey that Wall Street Journal did, and again, their framing of it and kind of some of the conclusions that they come to are interesting. But I guess my final takeaway is just remember, anytime you're reading about alternatives in traditional financial media, they're usually looking at it through the lens of the traditional investing bubble. Right, like that lens. A lot of times these publications, because they're written by the same people, they're written by people who are generally also unaware that an entire other world exists. Yep. And so just keep that in mind anytime you see private assets or something like that being talked about in mainstream financial media. Adam, unless you got anything else, we'll get on out of here.
All good.
Sounds good. Well, everybody, we appreciate you listening. As always, if you found this enjoyable, go give us a like, a thumbs up, a subscribe on YouTube or Apple Podcast or whatever you do on Spotify. We'd appreciate it. Lets the computers know you're enjoying what you're hearing and get this out to more people. But with that, we'll get out of here. We, again, appreciate you listening. We'll catch you on the next one. Just remember, where freedom leads, real wealth follows. Thanks, y'all.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.